It's the weekly 30-30 trading list on the ASX. We're reviewing the 30 best momentum companies over the last quarter and the companies that have had the best improvement in momentum this week alone, what we call the Launchpad. Gary Glover has been through the two lists and pulled out his favourite charts to guide us through this morning. Good morning, Gary. How are you?
Yeah, no, I'm great, Chris.
Just off air there, you were telling that it's not such a bad week and you've had some pretty good trades. So how would you sort of summarise the week before we jump into the leaders?
Yeah, I was saying I've done nothing but A-class trades all week. And I have, after reviewing my trades, there's sort of, three things I was looking at was sort of trade less often, try and slow down my process and just make sure, put them in a spreadsheet, write them down so I can sort of see the trades for what they really are. I think it's good to write things down because it's good for the brain to memorize it. And also sort of, it'll tell you, sometimes putting on paper, they will actually tell you whether it's a good trade or not. Sometimes you can be, it looks like a good trade on the chart, but then you put the numbers down and go, that's actually the risk reward's not that great. Or we put another trade on it and, it's like, well, that risk reward is off the charts. Like I had one of those this week here, right? I looked at something, big cap was in, basically came down sort of false break. I thought, okay, this looks pretty good risk reward here. Just wait for it to close above a certain level. Put it in my spreadsheet. I thought, Jesus, this is like 13-1 risk reward. So normally I might just sort of start with like a 5% position. So I thought, well, I can, with that risk reward, I'll just put, say, 10% on. And then the next day I was looking for it to break above, close above, move above that, the swing high. And as soon as it did that, I added to it. So I literally got myself another 10%. And so I ended up with like a 20% holding with I think it was like a net 10-1 risk reward on the whole position. And I was within my 1%. I don't like to sort of risk more than 1% of my capital. So that's the sort of key that normally you sort of, if you're getting a big parcel line, you normally got to wait for it to sort of get in the money to add to it and then really stop up so that, your first parcel might be, say it's like 0.6 or 0.7% of your risk. And then if it moves up a little bit, you can edge that stop up a little bit, lock some of it in. And then the second parcel, you're sort of coming in with the same sort of risk, but you're still keeping under one just because you're sort of scalding and you're sort of moving yourself, your stops there. There's one of the few times there I haven't had to, I've scaled to 20% without having to move any of the stops up at all. And I was still well within my risk parameter. I think I ended up with like a net 0.7% of my 1%. So yeah, even less risk than normal. And the upside was like a 10-1 risk reward. I thought, well, geez, I don't know what, two things can happen. I can get stopped out and I can lose, or it can go up and make, a big gain there. So our job as traders is not to sort of overthink it too much. If we get a good signal and it meets our playbook, get that trade on efficiently. And yeah, but I'm normally over the moon if I get like a 5-1 or a 6-1 risk reward. So, because then I sort of think, if I get 6-1, I look at it as that's just paid for my next 6 losses. If I get a win there. So yeah, this one here sort of, it's like now I've literally moved up half of my position now to break even. So I've only really got about 0.3% risk here with a 10-1 risk reward. So it's like, you're almost at peace now. Whatever follows. So, but yeah, so
productively good week, and that's just a large cap. Whereas you've noted, looking at the momentum companies, there are a lot of small caps with massive percentage movements. So if we look at those momentum stocks, is there anything that's caught your eye from a technical perspective?
Yeah, well, number 2 here on the list, this one here I circled as a no. So we saw this sort of move up here. It's obviously had a pretty strong run here, but on the last thing on the chart there is that big, sort of big pop and exhaustion. And that's the first day we saw volume there. You see that sort of, we've actually run up here, pretty light volume all the way up here. So the whole thing's traded up here on light volume, and then it's popped here. And then so that day there, you see a big pop. There's probably some news there that's sort of driven that, but everyone's sort of like, it's almost like buy the rumor, sell the fact here. And, if you understand these small caps, they're people who put these things together and hold big positions in them. They need a liquidity event to get out, Chris. So Usually that sort of pop and stuff, that's where they sort of generally sell into them. So when you see low volume all the way through and it pop up there, that should be a warning sign. And then the fact that it was down the next day and aggressive volume, that's a no for me totally. So 100%. So, for those sort of, new to trading here, if you do sort of see these sort of, see smaller stocks really run up here, then you see that pop into big volume, you should be very wary. Because that can be what sort of stops these things from coming there. And as soon as we open up below that, the next day, you know the stock's done. So so I think that's just a bit of a lesson there. Number 3 on the list was AW1. So I don't mind the look of this actually, Chris. It's had a pretty good volume there. It's a little small, but pretty decent volume all the way through here. Had that one day of selling off the high. And since then, we've sort of congesting here on pretty light volume here. So it'd be nice to sort of see a little flag or pennant possibly develop there. So for me, it's just sort of one to keep on the list. KAI is sort of similar, had a bit of a pop there, a bit small. Having this little tight congestion here, sort of, again, a little bit of a flag there developing there. Don't know if it meets our sort of, maybe 1.5 to 3 cents. That's sort of almost 100%. Possibly high type flag, you might sort of say. Definitely want to keep an eye on here because we look where the volume has just really dried up here. So nice selling. Yeah. So nice little contraction there. So definitely one to sort of keep an eye on there for some volume there. So let's write that one down actually, guys. And MP1 has obviously had a nice pop here this week. So it's funny actually, I did see that in the morning. It was sort of up here. I thought, it's actually, I thought it might have made an ABC, come back down to a new low, or maybe come back and tag the 50. Just didn't quite get down there. So I like, there's a nice theory there years ago to talk about the fold back technique. And sometimes when markets sort of find a low, the market will, how it traded into that point, it'll often trade out of it. So you think about double bottom, head and shoulders patterns, they sort of mirror themselves into that point. But there's other sort of patterns as well. So if you look at this point here, that's like the middle, the MP1. See how it sort of scaled back, popped up, congested, popped up, pulled back. So I thought it might have actually come back. I was really hoping MP1 would come back into the, the low sixes, like a little ABC in here, and away it might go. But unfortunately, some news came out a little early here, and even though it was only a small upgrade, the market got pretty excited here because this sort of stock's sort of coming out of maybe a downgrade cycle, and now it's had 2 positive upgrades in a row. So market's getting kind of excited about that. But M17 was on the list there last week, Chris. Actually, we sort of saw this. We did suggest to keep an eye out for a little tightening sort of setup here. So actually a little VCP in here if you actually look close enough. If you had your half-hourly chart there, probably looked even more impressive. But again, we sort of run up pretty strong volume. Look at that. Oftentimes we get 1 day of selling. That's no selling. A bit more volume stepped in there. Inside day, low volume. Up on a volume there. Maybe the next day down a tiny bit of volume there. Then back again. This is actually looking pretty. This is pretty robust here. So, but you're looking for these little congestion pause patterns there. So sometimes you look at multiple time frames, particularly some of these smaller ones, because it's sort of each cent does make it, is worth a different higher percentage when you're sort of talking about smaller numbers. So got to fine tune our entries a little bit on those. Saw satire there. Sort of one of my clients actually have been trading this. So, what amazing move there. So there's your little VCP in there. Tag the 50-day moving average. It's got a history of coming back to the 50 and bouncing there. So stocks have got their own personalities. If you go, each stock's got their own little
nuances and behavior.
Yeah, they do. So I look at the 50, the 20, the 10 and stuff there. So they say stocks that are on a tear here. So you can see here this satire. Once it's broken up above the 10-day moving average on its run, it hasn't broken below here. So I was sort of saying to this client, I'd be using that 10-day moving. If it closed below the 10-day moving average, I'd be out here. So just look at the stock previously, this little run here, it's sort of tagging 10, and then closed below the 10 that was over. This move up here as well, got its own history, got its own sort of personality. Once it closed below the 10, it was all over. So they say really, really strong stocks. Sort of, this is sort of Christian Calamagna talks about that, really, he's trading the only trades stocks in the highest 2 percentile on the market. So anything where the relative strengths are like above 98. And so oftentimes they're really vertical there. So he'll just wait for a pause and trade them. But he'll use the 10 on the strongest ones, and he'll use the 20-day moving average on the sort of the next sort of tier. Sometimes it's strong ones. So something like 360. So I must admit, I actually did use this technique this week a little bit. So that it pulled back 4 days, 360. See how this is like, this thing's extended here. It's gone to a new high. So it feels sort of scary here. On the chart, it looks pretty scary. But we had like 1, 2, 3, 4 days down here, and no volume. And even though it's gone to a new high here, I'm always sort of scared of these things reversing here. There's just no volume there. So this is what Christian Calamagna will be trading. This is like, oh my God, he's made so much money. It's unbelievable. But this is a stock he would be trading. He'd be trading one of the strongest stocks on the board, wait for a little pause. Either, if it was a really vertical one like a satire, pull back to the 10-day and buy it, or something a bit more mature, back to the 20-day and buy it there. But you can see here with 360, if you go back and look at the stock here, it's had a history of like, if you remember going back to 20, it sort of, it went through the high, had a bit of a shakedown, and then it just continued to go higher there. So I actually went through it. I looked through this daily pattern here and analyzed that, and sort of I noticed that on the chart there, it looked scary the whole time, but there was no selling. So I thought, okay, well, I'll just, reluctantly sort of bought some, just trying to teach myself to, follow the greats and what they do and see if I can learn from that. But yeah, it's obviously paid off here. So it's quite interesting. I had my stop in, pretty tight, just below here. But it just goes to show you, so as we talk about, Chris, these leaders, they just continue to lead and keep going. And even though they look scary on the chart, history sort of says that they, keep going. Just look, that's satire. That's unbelievable. I think, what's that Tom DeMark sort of theory there about, he used to say something like 10 or 11 closes in a row. We should be looking for the market to reverse. I think there's like 15 days in a row or something here, So that's sort of, it's pretty extended here. So yeah, I told this client, look, I'd be tightening right up here. Me personally, I probably wouldn't have lasted this long.
Probably would have been selling into strength.
Yeah, I would have sold some. But yeah, but trying to teach yourself good habits is important with the trading here. That's sort of one thing we're all trying to improve as traders. So yeah, Rome wasn't built in a day. So trying to do things that, other people do and trying to learn from it. So even sort of just starting small, to get yourself out of your comfort zone. So I made a few adjustments here, like, trying to trade the leaders, trying to stay away from the laggards, wait for these little pauses. Don't be afraid to stocks that look extended here, as long as they pull back on light volume. So yeah, so there's good lessons there for all of us there in that. So, mate, I'm 52 and I'm still ready to learn and try new tricks and try and get better. So yeah, we all want to improve there. So regardless of what result we get every year, even if you get your best result, my last 2 years probably been my best 2 years ever, but still feel like I'm a long way away from being anywhere near some of these other traders on the planet. So we've just got to keep improving as traders, got to keep learning. I saw Bubs actually was number 20 on the list there, Chris. So pretty decent volume through here. Bubs and maybe Bunting was sort of, probably less impressive, that one. But Bubs probably got definitely a lot more volume through there. Not sure whether it's sort of being a smaller stock here, but yeah, that's pretty interesting there. So I'll be watching this one pretty closely, looking for some kind of watching the counter moves there. But pretty good volume sort of accumulating here. Off the low was sort of broken that way. I think we mentioned here a couple of weeks ago that had broken a swing high, so that's always a good sign for me. We want to see it come back and break above here. So probably I like to see, I like to sort of see a little go to a new high first, and then secondly, sort of break above the first little high. So I wouldn't have touched this until I at least sort of got to 22 and a half. But it's climbing okay. Just want to keep an eye on MAY. I just noticed this one here had this is that sort of kind of been looking at a lot of stocks that are sort of, this is, we talked about this last week, how like a lot of stocks had sort of bounced up sort of near the high and sort of congestion. So there's a little bit of a VC, a little bit of a pullback here, gone to a new high again, pull back here, and then up to the high again, and a little pullback, and then a pop through there. So a bit of a VCP in there, but look at that volume there in through here as well. We're starting to see some decent volume sort of push through here. So just starting to realize the potency of this pattern there, Chris. So sort of like, when something has a really impulsive move off the low, so I actually write this in my sort of trading diary. It's sort of trades to sort of try and look for, identify really strong impulsive move, and then a pullback, and then basically go back to retest the high, and then see it like a period of congestion under the high. So whether that's like a VCP, or whether that's a little flag or a little cup and handle under the high, there's some different variations of that trade, but just going back and retesting the high, maybe just staying just underneath it, and then period of congestion there. And once you see, what you're looking for is this, get up to the high, some decent volumes. There's some decent volume days up around that high there. Pulls back there, and it's just very little selling here. So you want to see this pull back here and the selling dry up here. That's what David Ryan looks like. David Ryan won the US Investing Championship like 3 years in a row. And I'm sure he just that was one of his focuses, was just actually just pattern itself here. I know Mark Minibini does the BCP, but Ryan, this is Ryan's favorite pattern, is to look stocks to go back to the high, just congest under the high, really low volume, and pop through it there. So so I just thought that's a really good pattern to sort of look for there. E&R, I thought was look, this probably would extend it here, but the thing I noticed with this move here, Chris, had that 1 day of selling, and there's been no selling follow through here. So apart from the sort of the day of apart from the top here, selling's been pretty light here so far. So really not too much volume through there. So definitely want to sort of keep an eye on this. If this sort of can get a bit more time there, you get a sort of positive move on, positive volume there. Those are the ones that can sort of follow through. We sort of know the last month there's been quite a few of those that have kicked on here. COB, I was looking at this. I looked at this yesterday, Chris. I thought this looked pretty good. BCP as well. So we've broken out of this little low here. So coming into the low, then we always want to break. Like if you're in trending down, you want to start to sort of break some of the swing highs. That's a change of character first. So you want to basically identify a change of character, and then we've had a bit of a rally here, pull back in the range, a little bit of a squaring up in here. Actually, starting to look kind of positive there. Even though I went to a new high, I consider the positive. Had that little congestion again, and then broken through here. So for me, even if I was sort of waiting here, just wasn't sort of enticed by this move here, breaking above this high, I think is a good sign. But sometimes they would, but this would have been a really good trigger in here, because you sort of had all the ingredients there now. Change of character, a series of sort of high lows, and a little BCP and then a little B wave break there. That was quite good. So
then the congestion of what the early part of July, just under that, broke the B wave, touched on the high, and then congested right up next to it.
And this, people don't recognize this, but see this big chunk of volume here as well. That's thing you get as traders there, and this is sort of this is not understood well enough, in my opinion, and it's a very simple sort of volume comes in one of two places. It comes in at highs, or it comes in at lows, and that's sort of and really you just got to ask yourself, is this a sign of accumulation, or is it a sign of distribution when you see big volume events sort of occurring there? So so I'm always personally on the alert for when I see big volume occurring. I'm always sort of wary of something changing here, because that's sort of like, it just means, two things have happened here is that people have worn this downtrend all the way down here, and then the ones who've held on, they've finally given up, and then someone else has got to be on the other end of that transaction, Chris. So everyone thinks there's, the phrase is more buyers than sellers. That's, it's factually incorrect there, because for every contract note, there's got to be equal. The buyer's got to find a seller for the exact same amount. So as one party's leaving the building, another is usually entering, and it's usually the big volume is sort of where you get the, that's the change of hands there. So it's just interesting there. I sort of, this should be, you see big volume, it should be, that should alert you to the possible change in character, and then you're looking for, swing highs to be broken. So basically you're looking for an end of the downtrend. And then for me, I do like to sort of see above the 50-day moving average. So once we got above the 50, we had this little VCP, and then it's like, well, it's just, that met all my criteria there. So we don't need to sort of be, don't need to be trying to pick the lows all the way down here, because this is just, lower high, lower high, lower high, lower high, lower high, lower high, lower high. We don't want to be caught in that. We want to be sort of starting to see a few highs being, your higher highs established there and breaking above there. So it's a patient game sometimes. Where they say, great phrase I read there was, takes a lot of unspectacular practice to get spectacular results. That was some legendary quarterback Roger Staubach, which I don't know who he is actually, but I do like the phrase. So, but it is, it's sort of just got to get repetition. You got to be able to process them. You got to be patient. You got to wait for these things. Sometimes you can wait weeks and months there for these things to set up here. That is the quarterly momentum. So, looking at the weekly there, there's actually a few trades in there, Chris. I was actually watching here. I was just sort of had my hands full this week. There was so many trades all setting, developing up, and remember too, we had that. Our market has a 12 weeks, so for the XJO, it had this like 12-week coil here. So this whole thing is just probably looks a bit more, look at that. It's just basically like a congestion pattern there for 12 weeks there. Now, anyone can remember back to 2017.
I remember interviewing you through this, and we were quite bored.
Yeah, look at this. Look how tight this this thing was like in a 100-point band here, or 150-point band here for like 20 weeks or something. So it was in this congestion air zone, but then once it broke out of that, Chris, like within 4 weeks, it was at a new high. So they can, when you get these really long, dated congestion patterns here, for a long period of time, when they come out of them, they can just go kapow. So far, the index there it's gone kapow. Like to see it break above this little swing high there. But volume's quite good, pretty healthy volume here. Sort of seeing all the heavyweights like the, BHPs and stuff there pop out of here. I think the banks and that have sort of managed to sort of keep the high lows in place without being too still there. I think Macquarie was a little bit more impressive, but look at this. So through the whole period here, we've still haven't broken a swing low here yet. So as much as it's been tuning, still constructive. So so it's interesting there. Just I just got this feeling at sort of the start of this week here. I thought, wow, if we bounce out of this could be. So again, I looked for that sort of that was 4 weeks, and I looked for sort of multiples of that 4. So sometimes it'll pull back, 4 for 4, or sometimes it's twice as long. So if I see it pull back, which is 8 weeks after a 4-week rally, that's oftentimes a really good turning point for the market. But pretty rare to see it go 3 times, which it did. So this was actually a 12-week low. But that's so far we've bounced here. So interesting. Would have loved to see a bit more volume, something like this here. Like there's some good volume through that last rally there. I mean, there was nothing wrong with that rally. It was a breakout, good volume as well. Just didn't go on. I think I think the Reserve Bank and inflation, they got in the way there. But yeah, look, it's pretty interesting there that what's happening in the market here, but plenty of stocks are actually exploding here. I thought Regis looked pretty interesting there. There was a BCP in here too, Chris. So sort of obviously been downtrending here, but nice correction here was this pullback here. So obviously a second one here, nice little tight one there. So although you like to sort of see these a little bit more squarer, still a bit of a, for a stock which is normally pretty steep in the past, this is probably not as steep on the downside as it normally is. So this little last congestion in here came out of the slow, pretty good. So I think, Regis was pretty good. I think I did see the greys, which I'm pretty sure is on the list as well. The GE number 14. This is a cracking little BCP in there too, Chris, like that. So pull back here, pull back there, congested as well. Oh, once this has popped here, it's kind of gone through there. So
same pattern over and over, congestion under the high.
Yeah, that's exactly right. So yeah, obviously you like to sort of see these above the 50-day moving average, but I think the Regis one was above the 50. Well, maybe not. But yeah, the greys sort of did eventually sort of, the whole thing did catch up and then pop through. So it's pretty interesting there. I think on there, I just saw that pattern, quite a bit. AQZ there had a bit of a pop here with volume there. Look, you get your little BCP in there to some degree, probably under the 50 days, so less attractive for me. Don't really like to buy them down there. DZ, this is interesting there, just because this is a pretty large correction now. I don't really like to sort of see that. It's had a bit of a pop here, but no volume there. Congested and then popped again. A little bit more volume here, but that's probably unexciting to me. That this could be a trap here because there's been no volume that's come in, and that's I view this as like an overbalance of the trend. That's the largest correction of the move. So that would be a stay away from me. So CMM was pretty interesting. Now this is sort of Capricorn Minerals there. So again, another little BCP in here. You might got a bit messy. There was a few that sort of tightened up here and then popped up and then came back for a retest. Didn't break the lows, I think, and then went higher. So it might have been a bit of a frustrating few days if you were sort of, you'd entered on this long here and stop under the low. But there's a few lithium stocks that did exactly the same, Chris, as well. So I think that GT1 and GL1, they sort of they popped and then came back and then they went. I think GT1 as well, sort of popped out of the range and then come back. Didn't break a swing, didn't break a swing lows. This sometimes, but I'm probably guilty of being. I did trade this one here, but I don't like getting money back here, so I had a pretty tight stop in here. But it's come back here again, but now it's got looking a bit messy. I lose my BCP sort of characteristic, and I'm usually found something else I like with the market, which is full of trades at the moment. So I thought SDR was pretty interesting as well. The reason I like this trade, was watching this one there, because on our weekly chart, did come back and made a false break here. For me, I stayed out of this one just because feel the false breaks in some of the smaller stocks I've sort of got caught recently, and I'm just trying to stay in the top 100 there for those. But this looks okay here. It's sort of good volume there. I know a few brokers have sort of got this on their merging list. Volume's okay without being spectacular here so far. So probably for me, I'll probably watch the counter trend on that. But we just to watch and see. I think CU6 was sort of interesting as well, just because we've gone through a long sort of correction here. Again, sort of series of lower high. Now we've got to change the character there. So we've actually sort of broken out of this sort of downward trend. So now we're looking for signs of sort of construction on the upward side here. Looks pretty good on the weekly as well. So still got a series of sort of high lows or building in here. Would have preferred to sort of see that correction sit on top of there, which it didn't do. But still sort of somewhat, I love the fact. I mean, this is a really long, what I say about really long bases, you get big moves that sort of come out of those. So a bit like potentially what's happening with the index there. INR, that iron ore space there. So this is sort of a small net sort of come back, sort of flatlined there. Just getting back towards the 50 here. It's a pretty flat correction here so far. Could be a sort of a higher, could be a sort of setting up here. So constructive there, probably just not a leader, which I'm trying to personally sort of stay in there. Got modern deltas looked okay. Some of the mining services stocks look okay. IVR, bit small there, but has sort of popped out of the range. There was pretty heavy volume on the last rally, sort of come back a bit deep, but maybe it's building again. Probably a little small for me. And I think Korean was on the list as well. Again, it's a big sort of correction here, like on sort of sideways and sort of pretty flat here. This is like a corrective decline here. So if I look at the weekly there, this thing's sort of gone to the high here. It's just whole thing is sort of, it's pulled back here, but it's pulled back under the highs. This is kind of constructive here like the time. So this sort of it's interesting here. You obviously want to see a bit more volume there, but it's one of those stocks that might go back, retest the top here, maybe pull back, make a handle when we come through. So don't look forward too far, but just constructive there that we've again we've lower high, lower high, lower high. We're sort of finally broken out here now. So got a bit of volume here. So now you're looking for sort of counter moves as well. So just be careful with it. We don't want to be sort of buying lows here or picking lows. We want to be basically sort of trading stocks that are that have moved higher. So basically change your character, start moving up. And then ideally sort of want to sort of see them above the 50-day moving average as well. And start to sort of, start making sort of higher highs there. Trust me, after 20 years of sort of trying to pick lows, it's just a treacherous game. It's full of risk and full of heartbreak risk as well. So, if you can just sort of discipline yourself to be more patient, put your ego aside, just wait for these stocks to sort of set up and build and sort of come into them once they've established themselves there. Because the problem is there with the basing as well. Even if you do buy the low, it can take weeks and months to build. So mate, let the whole thing build and base. Let someone else sit in there for a month and make 3 or 4%. When the base has been built, and then it's gonna take off and make 10 or 20 or 30%. That's the piece that we want. We don't want the we don't sit there and make 5% or something. We want to make 25% when it breaks out and kicks on and goes, and our money's in there the least amount of time. We get the meaty part of the move, and money's precious. It's got to be working for all the time. You just don't want to be sort of sitting there. So, we just wait for those things to be established, and then try and capture that sort of fast moving part of the trend. Hopefully,
they're definitely wise words to work from. And as you said, you've been looking at bottoms and finding value and looking at PE ratios and all the like for 20 odd years. But you've been following more Kalamagi, Winnie Binney, David Ryan, all those trading and investing championships. The winners, the ones who have massive returns. And you've summarised it really well today to say that it's a very similar pattern with what's happening there. So has that been sort of a significant change you've had in the last couple of years to redirect the focus from the bottom right of the chart to the top right?
Definitely so. Like I think a couple of years ago, I honestly just went out and looked. I tried to sort of find out, we can all sort of be guilty of sort of just, doing the same things over and over again and not improving there. And I don't know who said it, someone or some wise words. Someone basically said, obviously the phrase sort of came to mind was that, if you're going to sort of try and learn from the best. So I thought, okay, well, how do I find out who are the best traders in the world, and how do I find out, who they are, what they do, and fortunately for us, I mean, nowadays with YouTube and podcasts and books, a lot of the guys put stuff on there. They get interviewed, and they go through their trades. You can actually learn something. And so I started to find a group of momentum traders who just got phenomenal results. When I first saw that can't be true. But then once I sort of saw that they're actually, you have to be vetted in the, particularly in the US investing championships there. So basically your account is vetted over the whole year. And particularly the guys who had great results in there. And they're just trading equities. I thought, how the hell are they making these sort of 100, 200? I mean, Oliver Kell made 900% in a year. Obviously, maybe you get your really bull market expansive period there, but 900%, Jesus, that's incredible there. And I know sort of Gil Morales and Chris Carter as well in their book, they made like 1,200% over 4 or 5 years or something, and that was obviously in the tech boom. But just working out how these guys do it, it's sort of, that's got me intrigued. And then, so it's taken me 2 years to sort of get going here. Like I'm still miles away from them. But my trading has more than doubled my performance since I've been following them. And then, and I'm definitely sort of feeling a bit more at peace with sort of my process and getting more comfortable with it. So, so I'm just hoping to make each year better and better.
Well, that's a great way to work at it, and consistently, as you say, chip away, keep growing, keep focusing, keep learning. So to that end, we'll probably say thank you very much, Gary Glover from Nervous Capital.
Thanks, Chris.
Gary's mentioned a few of those strategies that he's been building on, reflecting on, researching. There's a whole playlist to the right-hand side. Today, he mentioned pullback technique and high tight flags, and the playlist of that, plus many of the others. There's also on the left-hand side, Gary's Twitter handle if you want to follow him there.